All right, welcome again. This is TAZSS Trading Academy. And today we'll be talking about candlestick, right? And I hope the previous videos you understand everything. So if there's any question, please don't hesitate to reach out. So candlestick, right? So let's imagine a tug of war, right? So buyers pulling one side and sellers pulling the other. So what if I told you every candle on your chart is the story of that battle? Yeah, it's a story of that battle. So that's what candlesticks are, right? A way to visualize understanding fight between buyers and sellers. So let's get right to this chart. So what is a candlestick? Candlestick basic. A candlestick is a price band that shows four key data points over a chosen time frame, right? Over a chosen time frame. Now let's look at let's look at an example here. So open is where the price started, close is where the price ended, right? So I would like to draw a visual. So open is where the price started, right? For example, price um, starts here, right? And price start at this level. The price went up, right? And close at this level, right? So this is the start point, right? And this is the close point, right? So high is the highest point, the is the highest point that price reached, right? Is the highest point price reached. So price starts here, if price starts here, right, and closed here, right? So this is the highest point the price reached, right? So the low is the lowest point, right? Price reached is the lowest point price reached. So the start, most times the start is not always the lowest point price reach. I will explain that, right? I will explain that. So if you look at this, if price closes higher than it's open, we call it a bullish candle, right? A bullish or green or white. So most charts, you can actually change the setting. Most charts adjust the settings to as they want, right? But rightly it is green, right? You can see there's a green candle here, right? You can see there's a green candle here, and there is a red candle here. I can see that red candle here. So now this green candle is a bullish candle. This red candle is a bearish candle. Why? Because it closes lower than it's open. Right? I'll give an instance. Okay, let me give an instance from the first one. If price closes higher than it's open, we call it a bullish candle. So price open here. There's an open here, right? There's an open candle here. There's an open here, and it's closed higher. It closed higher here. So this is a bullish candle. So, but if it starts high, right, and close low, and this is the close price, we call it what? A bearish candle, right? This is the high price, started from there and it went down and close, right? We call it a bearish candle. But this one start low, this one open low and closes higher than it's open. We call it a bullish candle, right? We call it a bullish candle. So now I want to explain something. High point reached and low point reached, right? I want to explain high point reached and low point reached, right? So if you look at this, right, let me just draw something. So let me draw a complete candle. Please don't mind my drawing. I want to draw an instance. Now now this is a candle, right? This is a bullish candle. Let's use example for a bullish candle, right? So market open here, this is the open of the market, right? This is the open of the market, and this is the close of the market, right? I mean, this is the close of the candle. I mean, this is the open of the candle and the close of the candle. You understand that? So now this point here, you can see this level market reached and this level market reached. So now this is the lowest point the candle reached, right? This is the lowest point the candle reached. So when the market open here, it went down, right, and push up back, right, and push up back and keep going up, 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 went up to this level, right? So one thing, I don't know, maybe any condition in the market, and it came down, came down, came down to this level, right? So this point, this place here is the highest point the market reached, right? Is the highest point. So I can classify this as high. It's the highest point. And let me just put H there. That's the highest point. And here is the lowest point market have reached, right? So here is the open. Let me just, here is the open, right? And here is the close. Please take note of that, please. Right, this is a bullish candle. So market open here, came down, went up and came down to this place and leave a footprint and just went up back, boom, right? So leaving this place below the open. So below the open is the low, right? And above the close is the high. Please take note of that. Above the close is the high. So this is an example for a bullish candle, right? So when I say high point, the highest point reached for the candle is the high, and the lowest point reached for the candle is the low, right? So the open is where the price started, and the close is where the price ended, right? So if the price closes high than it open, you get a bullish candle. So if it closes lower than it open, you get a bearish candle. So the body shows the open or close, and the wick shows the high, right? The high or the low. So this is also a wick. So it leaves a wick here. This is not the candle, right? It shows the wick, right? So the wick is just like the shadow. The shadow the candle leaves, right? So here also is also the wick, but this is the body of the candle, right? I hope you understand that. Please, if there's any question, please drop it at the comment section or send us a direct message. We will surely attend to you immediately. So let's move on. Let's move on to the next slide. Was on the next slide. Yeah, time frames and candle. Time frame and candle. Now you can choose the time frames of the time frame of a candle. For example, 1 minute, 15 minutes, 1 hour, 1 day. Let's get back to the previous slide to show you something about it. Right. So if you look at this, so this candle here, this candle you see here on this image here, right? As time errors. We don't know if this is a 1 minute candle, 5 minute candle, a 15 minutes candle, 1 hour, 1 day, weekly candle, but this is just a candle, right? Remember I said a candlestick is a price bar that shows four key data point over a choosing period of time, right? Over a choosing period of time, over a period of time, right? So a candle is not just a lasting thing forever. No, it has open and close and high and low. I hope you understand that. So let's get back to the previous slide. Okay, get this off. All right, so I said time frame and candles. So you can choose the time frame of a candle, 1 minute, 15 minutes, 1 hour, 1 day, etc. As the case may be, right? Depending on what you want, right? So a 15-minute candlestick means all four price points, right? That's the open, the high, the low, and the close. I explained that in the previous slide, right? So occurred in those 15 minutes time frame. So these things, these 4 points occurred in the 15 minutes time frame. That's, I give an instance. So if you pick a 15 minutes time frame, so it has each candles, right? If you pick a 15-minute time frame for the candle, so each candle on that chart we have open, high, close, and low candle, right? So the higher the time frames, the more meaningful the candle become, right? The higher the time frame you pick, right, the more meaningful the candle become. For example, you pick a 1 hour time frame. So each candlestick on that chart takes 1 hour. I give an example, 1 hour. If you pick a 1 hour time frame, for example, so each candle on that chart takes 1 hour to complete the 4 points: open, high, low, and close. Right. So the candle open at the start of 1 hour. Before the 1 hour ends, it must have displayed the high and the low and closed already. Right. So when another hour start again, another candle open. That is it. So the higher the time frame, the more meaningful the candlestick becomes. An example is a daily candle shows stronger intent than a 1 minute candle. Right. So just take a look at that. A 1 minute candle and a daily candle, you compare that. So a daily candle is stronger than the 1 minute candle. So the anatomy of a candle. Let's move there, right? So the body is the restraint, right? Where the most price action happen. The body is the restraint. The body of the candle is the restraint where the most price action happen. The wick, which is the shadow, is where the price tried to go to but couldn't stay. I give an instance. I've deleted that. Okay, let me just draw that again. Let me draw a candle. Let's see. Don't mind the drawing. It's just explanation. Just an explanation, right? So if you look at this. This is the market open here. This is a bearish candle. The market open here. I mean, here, right? It opened here, right, and went to this point. This it gave this highest point, right, and went down from there, right? Went down to this and give this lowest point, right? Came up again and closed here and closed here. You can see. So this is the highest point and this is the lowest point. So these are the wick. Call it either the wick or the shadow. And so this is the real body, and this is also the wick or the shadow. So you can look at this bullish candle and you can see it has a small wick, right? It has a small wick there over there, right? And it gives a bigger wick, a longer wick on for to the highest point, right? Give a bigger wick to the highest point. You can see that over there. I see that over there. Right, so let's get to the next slide. Right. So the week or shadow is the price where is the price is where the price tried to go to but couldn't, right? So look at this price tried to get here but couldn't, right? But just leave a mark that, oh man, guy, I've gotten to this point too. You understand that? So he's giving an instant that, okay, guy, I've gotten to this price, but I can't go further. I have to come back. You understand that? So if the wick is long, it means price was rejected there. So it's same thing. If the wick is long, so for example, market close here. So this market close here and gives a long way, right? So if the wick is long, it means price was rejected there. Right? That means price went up, down, up the way there. Price went up the way there. The price went there but rejected, right? So the longer the wick, it shows that price got to that place and reject. So the long upper wick shows that sellers reject high price. So maybe this is let's say this is a buy candle. Let's say this is a buy candle, right? So market open here. This is the open. So and went up down to this high, right? And came down and closed here, right? So this long wick shows that sellers reject high price. They reject the price from high, right? Same applicable to lower wick. The lower wick shows that buyers reject low price. I hope that is taken. I hope that is taken. Cut that side. One, two, three, in action. I hope that is taken. So that is that about that. And please, if you don't understand the videos, please go back to the start, watch again. You can download it and have it, revise through, have your notes, study it. You understand that? Study it and have your notes. So I hope no other question about candlestick. It is very important to understand candlestick. Remember, I talk about the open, talk about the high, the low, and the close. So for those that we continue in our courses, we'll talk about the basic candlestick pattern. There are candlestick patterns, right? So I'm not going to talk about that now. So as we move on, talk about that in the next videos or courses you're going to get. So and also talk about how traders use candlestick, right, for entry point and exit point, how they confirm trend continuation and reversal with candlesticks. So now, and the mistakes to avoid. So we'll talk about that as we move on. So candlesticks are market voice. So learn to listen to it, right? Learn to listen to it. So candlestick and market voice, learn to listen to it. They tell you where traders are fearful, greedy, and indecisive, right? So in the next session, we'll talk about the technical. We'll do the technical. We'll talk about pips. That's what I'm going to talk about in the next section. Talk about pips and how do we calculate it, right? So I'm going to break it down in the next video. So thank you very much and